Hey, welcome back. Today's video, what I'm going to go over is developing a strategy for investing in 2025. So I got this little thing here called a Remarkable, and it's really cool. You got this stylus, and I can write ideas down. So I'm going to start doing videos more, not just talking conceptually, but actually giving details on what action steps that you can take. So in this video here, it's going to be about action steps and what I go through in developing a strategy and what my strategy is for 2025 and how maybe that can possibly help you. I think it will help you. And it's more of a mindset of what to look for. So anyways, the first topic that I have on is about look, listen, and take notes. Survey the landscape geopolitically and economically globally. Now, what does that mean? So what that means is there's a lot of changes that are happening right now. Exactly, the changes are you have a new president, Donald Trump, that's taken over in office. So when I look at what that means as far as investing and making money, is that is a huge change. And what that change is just if you look at what is happening around with just how the government has over the past 4 years or even longer taken on all this debt. It's taken on, it's a $33 trillion worth of debt. And of that debt, about a third of it, 33% of it has to be refinanced in 25. So looking at that alone is you have the government that has a huge financial debt. You also right now have the fact that the outgoing administration has left some challenges for the new incoming president as far as debt ceilings and the debt that the country's going to take it on. You have new policies. You have the incoming president. There's things that he's more interested in that the other administration was. Executive orders went crazy on Monday. They're continuing. So when you look at that listen approach, you look and you just digest everything that is happening, and then you listen and decipher exactly what is it that you're seeing. A lot of times what you see and what you hear are two different things. So in strategy one is you look and you listen. If I listen to what Donald Trump is saying, I think he is changing the game as far as how the United States looks at the world. One thing that he wants to implement is he doesn't want any more wars. Whether you believe this or not, but we are actually in what I consider World War III. World War III is much different than World War I or World War II. You have to understand there's always going to be conflict. And what does that conflict look like? Are we digging trenches and shooting rifles back at each other, trying to gain 20 or 50 yards? Are we trying to gain the next hill or what it might be? What it looks like right now in 2025 and going forward is you have major players, and I'm just going to give you the two obvious, which are the United States and China, and they are battling right now in a world war, and it's a proxy war. And what the proxy war is, they're using other nations to do their dirty work for them. Whether it is the United States using Israel to go after Iran and Hamas and that, or whether it is Russia using entity, or whether it's China using somebody, these large countries are using other countries to implement their dirty work per se. And the funding is coming from those organizations, large countries, whether it's Russia, China, or United States. So that's why my mindset is we are in that World War III stage. Now, you can be afraid of that, or you can embrace it. I believe that you embrace that because if you try to run and hide and you don't embrace what's going on. I used to have a saying that when I worked in finance was that if the whole building caught on fire and you came through the front door, and the whole building is full, only so many people are going to get out that front door. You always have to be looking for another way out. So look, listen, and then when you look and listen, take notes, form your opinions. The listening part of what I'm hearing is the fact that Trump has come out and said that Canada, 51st state, he actually, I don't know if you want to give him credit for it or not, Trudeau actually has, resigned. I don't know all the details to it, but I have my own opinions on why that all went down. Trump has come out and said that he wants to buy Greenland. Now you might think that's crazy, but you look at, that's the next biggest ocean with the ice melt and with global warming and sea rise, and I guess it's also a play to keep China out of Greenland. He's come out and said that he wants to take the Panama Canal back because of U.S. defense, and a third of the ships that go through there are U.S. ships. And he's also come out and basically been very loud about making cartels, terrorist organizations, to allow the military to be involved with that. Everything that he's saying, and you throw in other factors as far as the upcoming elections in Brazil and Colombia and Peru and Chile. You look at Milei, who is down in Argentina, and the relationship that Elon Musk and Milei have. To me, what it looks like is there's a pivot from an east-west type of viewpoint from that. It's more of a north-south and continental, North-South America play that is going on. I'm looking, I'm listening, I'm paying attention. This is what I'm hearing and trying to put those pieces together. So number two is, as far as coming up with a strategy, is focus on an area of interest or areas that stand out as possible opportunities. Again, these are all my handwritten things here. So if I've looked and I've listened, and now I'm focusing on that area, what are those opportunities? What are the opportunities in Greenland? What are the opportunities in Canada? What are the opportunities in South America? What's the opportunities in Panama? And you start to focus on that. If the opportunity is that we are in these proxy wars, what does that mean? Now, again, narrow it down. What does that mean for the cost of gold? What's the cost of silver? What does it mean for our natural resources? What is the relationship going to be between the United States and Venezuela when it comes to oil? What does it mean? I mean, when the incoming president renames the Gulf of Mexico to the Gulf of America, I mean, that's a pretty strong statement of what your intention is on the continental side of it. So you look at not only the commodity prices and the commodities that come out of those areas, but you also look at the minerals and the power, the infrastructure, the opportunities for companies, the manufacturing capabilities of companies that are already doing business in there. How does that affect them? One of the areas that I pay a lot of attention to is construction and home building, because it's a personal interest of mine. Not only do I look at the price of homes, but I look at commercial real estate, I look at the builders, I look at the commodities, whether it's wood, lumber, steel, HVAC units, copper. I look at all those things. So you focus in on an area and how what you're seeing and hearing is coming together. Then you research those areas of interest that you might have, and the opportunities, and you evaluate the sources in which that information is coming from. I always believe that you just can't listen to someone talk that's just talking. And is it credible? Vet that information, challenge that information, form your own opinions, but really research that information and decipher what does it mean and what can I do. For example, and if I'm looking at a stock, and if I'm looking at the purchase of stock in 2025, I'm looking at not only the fundamentals of the industry, I'm looking at the geopolitical areas of what's happening around that industry, and then I'm also looking at the technical analysis of what's happening with the price itself. Because when it comes to the stock market and the economy are separate. They are not together. They do not run parallels. You could have a company that fundamentally looks fantastic. It is trading at a low PE, price to earnings ratio. Market cap could be all the fundamental numbers. You could fundamentally look at it. I don't necessarily believe in all that because I'm not the accountant. I'm not the bean counter taking that. I have to take it all for a grain of salt. And it's, you look at those things and you give it just face value. But that's not the only decision that I make. I look at supply and demand. I look at, on the technical side of it, things run in patterns. And the more that you look at pricing of anything, whether it's a commodity, a future, a stock, a bond, or whatever, things run in patterns. And looking at those patterns and identifying what is a wedge, what is a channel, what is a head and shoulder, what is a cup and handle, what are those? And what I mean by that more specifically is that if you have a price of something that is running like this, up and down, and it's headed in an upward motion, and it's in a channel that's moving that direction, that's a pattern. It's something that you can look, you can listen, see what's going on. What's the probability that it's going to continue that cycle? And then when it breaks that cycle, believe it. Believe if it's in a channel and it is moving up and it breaks out over top of it, believe that it's going to continue. But the opposite would be, if it breaks out of a channel and goes down, believe that that's where it's going. So look at the fundamentals, look at the geopolitical, analyze the information that you're getting it from, identify the patterns that are showing themselves. Number 4, form your own opinion and recognize, again, the patterns and what are called asymmetric opportunities. I base what I believe in everything on probabilities. I often say many times, nothing is guaranteed, nothing is for certain. It's just the probability of something happening. Now, when you have that belief, you can analyze the risk associated with getting involved with it. I really like, whether it is in business or trading or trying to make money, is asymmetry. Is I look at something that if it has the potential to have an outcome where the outcome is a big move up, whether it's 20, 30, 40, 50%, 100% becomes more valuable, more makes me money, versus the downside. If it has the downside risk of a 10% and an upside risk of 50%, that is an asymmetric trade that I'm interested in. If it has an upside of 10% and a downside of 20, 30, 40%, that it's not worth the risk of being involved with it. So identify opportunities, identify what those risks are. And risk, again, is what's risky for one is not risky for somebody else. When you're a kid growing up and you fall out of your bed, the risk is that you're falling and you don't necessarily know how hard it's going to hit. As you get older, you know the risk when you roll out of bed, what it's going to be. So you go to sleep every night, and it's not as risky going to sleep in a standing bed than as if you're a kid and you roll out of it at one time. And that's kind of a simplistic way of saying it is, but how you get comfortable with risk is understanding all the probabilities and all the possible outcomes, weighing those outcomes, understanding the information to where you can explain it to somebody else, and forming your own opinion and making a decision. Number 5, remove emotions. Remove emotions from your strategy and use multiple perspectives and viewpoints to analyze trade opportunities. Become an expert in the areas you are pursuing. Again, removing those emotions. I have people a lot of times will say to me, hey, I really like this. Why do you like it? I don't know. I just really like it. To me, that doesn't pass the test. I don't have to really like something. There's certain things I really dislike. I'll give you an example of something I dislike. I dislike the fact that, picking on Donald Trump, but he launched the Melania and the Trump meme coin. To me, as an investment, that is not an investment. I believe in cryptocurrencies. I believe in whether it's a Bitcoin or Ethereum or any type of a cryptocurrency. But a meme coin, to me, is a pump and dump or a pyramid type scheme. It doesn't have any value. It doesn't show any value. It doesn't store any value. It is an emotional play. And in most recent times with that Trump coin, I believe the market value went up to $28 billion in pretty much a worthless coin that the Trump family or the Trumps have, I think it's 80% ownership of. And so it made them a lot of money. To me, I don't even believe in investment in like that. That's just my opinion on it. Some people, for example, I like silver. I like gold. I like those things. I like holding them. I like them physically. But I don't buy silver or gold that have fancy designs on them or that are limited editions, this or that or whatever. To me, it's again, that's an emotional part of it. I look at the value of the raw metal itself versus actually a commemorative coin or a limited edition or this or that. I look at the value of the material itself. I don't add the value of what a limited edition could be. Again, you could feel differently about it, but that's I form my own opinions. I hope that you form your own opinions. And one of the big things is that multiple perspectives. So getting back to the $28 trillion or 28, I think it was $28 billion of value that the Trump coin, there are a lot of people that their perspective is that was a good investment, and they made that investment. So not all perspectives are the same. If I wanted to make money and I got in before, and my perspective was only to make money doing that I would buy that, ride that up, and then dump it and leave it. That's a different perspective of somebody that's emotionally attached to the fact that Trump had this coin and he was they were always going to have it because it was a memory for them. Again, two different perspectives. So look at the perspectives of both sides. There's opportunities on either side to make money or lose money. And there's always more than one perspective. So perspectives are a good thing to keep in mind of. Take those feelings out. Take those, I always say money doesn't have feelings. Houses don't have feelings. There's a lot of people that get emotional over money, and that's one of the biggest reasons why managing money, people fail. They look for instant gratification. They look for how money makes them feel or how investments make them feel, and you're trying to tie an emotion to something that doesn't have an emotion. It doesn't give you anything back. And I'm going to cover this in a little bit, but I always say that a lot of times you give up your freedom because by going into debt to make yourself feel better, what you're doing is you're causing yourself slavery because you have to work longer or you have to work harder or whatever that might be. So, some of the things I do is very simple. I'm sitting in a 2010 Toyota Tundra truck that I've had for a long time that's got 260,000 miles on it. I love my truck. It doesn't owe me a thing. I take care of it, and I don't need to be riding around in a $100,000 truck or because it's nice and fancy. I'm not frugal by any means, but it's all about perspective and emotions. Number 6, implement a strategy over timeline, evaluating and reevaluating as you go. It's really important because you don't want to be too rigid in how you come up with a strategy and be so determined that is, I'm going for broke. This is it. I've come up with a strategy. I've evaluated. I've done research. I've become an expert. I've done all these things, and then as you go, you have to reevaluate as you're going. It may change. Geopolitically, something might change. Locally, something might change. Your situation might change. There's always going to be changes. So you have to be adaptive to being able to make those changes. Throat's getting a little dry. I'm getting a little worked up. Actually, number 7. This is one of my favorites. Pick an entrance point and exit points before getting involved. One of the things I've always said is that before you before you become a partner in a company, or before you become a partner with somebody else, you look at how you're getting in, but you also look at how you get out before you get in. I always think that's really important because with any type of investment, relationship, business partnership, whatever it might be, there's going to be times where it doesn't go well. And I'm not saying you cut and run, but you spell out before, when you get involved, of how this is going to go and how do I get out of it. Simplistically saying is that if you're involved with a trade, and let's say I'm going to trade, I just put a trade in the other day, and it was a call. It was an option, and basically what my trade was is to see, it was on a part of the market that I believe over the next 3 months is going to go in a certain direction. Before I even placed that trade, I picked the number at which I'm willing to buy that trade for. But actually, once that trade executed and I then own those contracts, I immediately put in what my exit point was to get out of that, on a high side and a low side. So I protect myself. If it falls down, make your losses small. It's easier to recover. It's hard to recover if you have a loss that is a double digit or more loss. Keep your losses small. As you're profiting, you might have several exit points out of a position that you've put in. And it's okay to make money. It's okay to take money off the table. And one of the things I always feel great about is that when I make my initial investment back and I'm playing with house money, it always makes me feel much better. And then I deploy that money somewhere else, because that is a new trade, a new strategy that I develop, and I keep going. So, again, getting back to, just read my notes here. In either profit or loss, and take small losses. Take the small losses and turn. Don't get greedy. Don't become a hog. Hogs get slaughtered. Don't try to turn something into that it's not. If something is telling you what it is, believe what it is. I believe that with people all the time. If somebody's telling you who they are, believe who they are. Don't try to change them. Don't try to change them into something else you want, whether it's a friend, a coworker, a partner, a business partner, someone you work with. If they're telling you who they are, believe that's who they are. And that's something that you develop over time. And if a trade is going a certain direction, you can't outlast what the market is going, whether the direction is positive or negative. You can't change that yourself. You're just not that powerful. Number 8, I believe, educate on more strategy and techniques. take control of your own decisions. For example, what I mean by educate, if most people know how to buy stocks, and that's called in a long position when you own them, and that is only one side of a trade. There's also the sell side of a trade. So if right now your investing knowledge is where you only know how to buy things, you don't know how to sell them, learn how to sell them. Learn how to make money. Learn how to buy something, then sell it and make money. Also, learn how to sell something before you own it. And you're going, how does that work? Well, that's called a short position. And what a short position is, everybody who's ever owned a house has basically shorted before. And I try to explain this in a pretty simplistic way. And there's two ways in which I explain this. The first way I explain it is, imagine that you borrow a phone from a friend, and it's an iPhone 15, and you know that the iPhone 16 is coming out. So you go out and you borrow the iPhone 15, and you sell that iPhone 15. Before the 16 came out, you bought that iPhone 15. And let's say you sold it for, make it easy, $500. But you also know that the iPhone 16 is coming out, and you've made the deal or the contract with your friend that you've borrowed this phone, and you're going to borrow this phone for 2 months. And then you're going to give him an iPhone 15 back to him. Now, the way the shorting in this scenario works is that you've borrowed this iPhone 15 for 2 months. In that time period, the iPhone 16 came out. You've borrowed the phone, you've sold it for $500. Then the iPhone 16 has come out. Now iPhone 15s you can buy in the same exact condition, shape, memory, everything about it. You can replace it for now $300 because now it is cheaper than what it was when you borrowed it. And then at the time to give the phone back to your friend, you took and paid $300 for a different phone. You've sold the one that you got from him for $500. You've now purchased another one that's exactly like it, has no memory in it, it's been canceled out, same product. Now you give it back to him, you paid $300. Where did the $200 go to? The $200 went into your pocket because you took advantage of selling something that you knew you had to give back, but you took advantage of the price going down in order to do that. And that is shorting. And that is something that you can implement in your trading strategies. You have to be careful because, it's just like owning something. It can go the other way on you. So again, you do your research, you evaluate, you analyze, you form your own opinions, you develop what you think, you make a calculated plan on how you're going to do it, and you do it. The same thing happens that I just explained to when it comes to buying a house. When you buy a house, it's the same situation, but you're shorting the dollar versus the phone. Because when you go to a bank, you're buying a house. And when you buy that house, most people get emotionally attached to it. They buy the house and they live in it. And at some point in time, they're going to sell that house. And their goal is that when they sell the house, they sell it for more than what they bought it for. You need dollars, you need money, you need a loan in order to do that. So you go to the bank, and when you go to the bank says, I'm going to give you money for 30 years, and after 30 years, you're going to owe this amount of interest for doing that. Well, it works the same thing when you do a short trade. You are borrowing someone's stock to sell before. Well, you're borrowing cash. It's the same thing as what a bank is doing. You're betting that over time that the value of your house goes up and that dollars become less valuable, and that because the buying power of the dollar goes down, you've actually are replacing the dollars that you've purchased that are worth less than actually the dollars that you purchased the house with. Now, it's a little bit more complicated, but it's the same principle. So you can do that. Also, things that you can learn and educate yourself on is there's there's so many types of investments out there. There's something that appeals to somebody. It could be trading cards. I don't do that. It could be houses. It could be chocolate futures. It could be oil, gas, silver, gold. There's something out there for everybody. And you pick areas that you feel really comfortable with that interest you. Again, for me, I like tangible things that I can hold. I like things that I can see. I like to create and build. And I also, the industries of money that I follow are the ones that are around construction. So there again, that's my strategy. Let's see here. Make the decisions yourself. If that is a big one, is if you I spoke about options. Most people don't understand options. Options are contracts that you take out, and they have leverage to them. So typically it's around 10 to 1. There's 10 contracts per each trade. So what that allows you to do is whether you want to own or sell, long or short a position where you're betting the price is going up or down. When you take a Series 7 exam, the lion's share of what your knowledge has to be is in options, because the Securities and Exchange Commission believes that in order for you to be able to manage money and manage risk, you have to understand options. If you do not understand how options work, then you're not going to pass your Series 7. So there's a lot of people out there that sell mutual funds that have a Series 66 or a Series 6 exam. To me, they're just salespeople. All they're doing is selling a mutual fund that someone else is running. They're not managing money. All they're doing is selling a commodity, whether that commodity was, like a shoe or a piece of clothing. That they don't have any basic knowledge in how to protect yourself. So you can always expand your knowledge base and learn more yourself. And I can't say it enough. Learn yourself. And hopefully I can help you do that. I'm going to, each one of these different steps that I'm talking about today, I'm going to do an actual video with graphics and go into a fuller deep dive into each one of those. One of the things that is a lot of fun to do is paper trading. Pretty much every account out there, whether it's Schwab or an E-Trade or anything else, they allow you to do paper trading, where you can actually go in and open an account. They'll give you a fictitious amount of money, and then you can test your theories, and you can hone yourself on trading and learn how to trade and learn how to do everything yourself. Again, that's a skill, and it can be a game. I think these are things in which we need to teach our children that it's not complicated. It is something that is out there for anybody and everybody to learn and use. The information is there. It's just we just don't take the time to do it because we want someone else to do it. And then people get upset that they don't have a retirement, or their retirement was lost, or their pension's no longer any good. Whatever the strategy is, but the bottom line is it all falls on you anyways. It always comes back to you are responsible for your own well-being. So take control, take ownership of it. Is one of the, I can't say enough. When you're developing your ideas, do not get caught up in FOMO, fear of missing out. That is, there will always be opportunities. Don't rush yourself. Take your time. Don't get involved with anything that you do not understand explicitly, or that you feel like you're under the gun in which that you have to do that. Always keep analyzing your sources of information, where they're coming from, and be critical of those sources, whether you're critical of me or anything else. I'm certainly not intentionally going to do anything to harm anybody. I want people to become more empowered with learning themselves and understanding the basics and how to implement that themselves going forward. Again, I always am a believer in that, you know, your own finances are is like a company. It's like a corporation. So embracing that mindset is that you do what's best for your corporation, whatever that might be. And you do that investing yourself. And whether that is in your own finances or your own health. Again, I'm a carnivore, so the investment I've made in myself through health has been through my diet, and my investing and skill set go hand in hand. It takes discipline. It takes a systematic and a research to move forward. You implement a plan. Sometimes it doesn't always go to plan. You adjust your plan. You reevaluate. The fear of missing out, whether it is a hot stock that I completely missed, or whether it is an opportunity that you know, we were at a party and I didn't have a piece of cake. It's fine. There's going to be more cake. There's going to be more opportunities. So keep a very tempered and steady approach. Don't get emotional about it. I try not to get emotional about the trades and things that I do to make money. I don't get emotional about my food anymore. Again, it goes hand in hand. So I hope this helps, and I will be back with another video that's in detail of each one of those 8 steps that I went over, and I'll see you on the next one.